Hey everyone, welcome to current serial marketers members and other friends of the community and me and perhaps Mark. Very excited to have Mark Jackson here today from Besolo. Just my very quick intro for him is that when I'm talking about how to structure businesses and what makes sense, and I learned a lot on this call, and I love being in a position where I meet with someone that I learned so much from and say, okay, well, let's like this deserves a bigger audience. So, Mark, you've got a bigger audience here. I'm sure more are going to be watching the recording and love to learn more from you today. And of course, uh, as always, get questions coming in here. So, as there are things you want to make sure to cover today, to attendees, and as Mark says, something you need clarity on, then let's yeah, make sure to make the most of your time here. So, Mark, welcome.
Thanks, David. Really appreciate this opportunity to talk to everybody. And yeah, we'll be going over kind of one of the biggest questions that we all face as independents, solopreneurs, businesses of one, freelancers, whatever you want to call yourself, which is the company structure question. And Ruth, I am sorry, we will not be going over the partnership option today. We'll be focusing on single member LLC versus S Corp. If you want to, you can feel free to reach out. There'll be an email and we can go over that together in person. Okay.
Yep. Thank you.
Great. All right. A little bit of background on myself and co-founder Jeff at Besolo. We were both fractional freelance for over a decade each, and really kind of understand what it's like to try to live as a full-time independent. My father was also self-employed independent my whole life, and both of us coming from different angles got really kind of fed up with the compromise that you face in this country being an independent. My wife is a kidney transplant patient, so for us, the biggest challenge about being independent is getting access to really good healthcare. And then for Jeff, he's a very type A CTO, and he hates all the little, kind of compromises around the complexities and the admin burdens that are very unclear. So with our kind of stories combined, we came up with Besolo. And today we are very happy to say that, we do have a platform that can solve a lot of both of those things, not in every state for the benefit side of things just yet, but yeah, we can do a lot of good work. So the reason this really matters to us too is like we felt, I would rather be fractional. I love the lifestyle. I love the, life design that you get to do being independent. And it feels like one of those things, it's like kind of a national disgrace that it is so hard to do. The data is all saying that, since 2020, full-time independence has more than doubled. And in some time in the next 3 to 10 years, approximately 50% of the entire American workforce will have independent work in their lifestyle as part of this bigger portfolio career approach. So we're just excited to, have lived the lifestyle and be able to be here and try to help people achieve their dream if this is what living, if being independent is their dream. So here's some high level stats that we really figured out that were pretty wild, right? 25% of folks independent don't have any healthcare coverage at all. 60% are unincorporated, not using an LLC, and we'll talk about that today. 87% though are not using any type of formal retirement plan. And then of course, one of the biggest, nastiest problems as well is the duct taping together. Maybe duct taping is being too generous. It's probably more like bubble gum and shoestring, all these different tools to put together an ops stack. And all these things can lead to someone going, I don't want to be independent anymore. And we call it churning back to W-2. So a little bit, what is Besolo? And we'll go through everything today. This is going to be all about information and education and just sharing Besolo's perspective on this kind of big question around company structure. At the very end, though, if you want to stay around, we can do a platform demo. But today, we really believe and feel that we are the first true all-in-one platform. We feel that these are the three tenets that any company who's trying to help people live an independent lifestyle have to solve in some meaningful way in order to make the independent lifestyle more sustainable. Each one of these things can cause someone to churn back to W-2. On the admin side of things, it's, maybe I don't know how to do invoicing or accounting. On the tax system side of things, right, you screw up your quarterly estimated taxes and get to April and write a $20,000 check. That's what I did one year. That was really fun. That doesn't feel too good. Tony too, there he is. And then of course, if you get all those things dialed, you get down to the really, really nasty one, which is how the heck do I get benefits? So we can meaningfully help people on all three of these fronts, either as an LLC or S Corp. And that's who we're serving today as LLCs or S Corps. But today we'll go over sole proprietor, LLC, S Corp, and kind of just look at all three of those options. If anybody wants it, offer to all attendees of this webinar, if you go to this website, link this URL down here, besolo.io/partners/serial marketers, you'll find a landing page that looks like this, and it has a form here. We do have any new solo LLC members signing up before Saturday. We give free 2024 tax filing. Sorry about the closeness of that date. That's literally where we need to get the tax filing rolling. Also, you get free LLC S Corp formation if you want it. We'll do a personal demo together as well, and then you get lifetime discount on LLC or S Corp product. So 129 down to 116 or 349 down to 279. So it's there if you want it, but let's get into the fun stuff. Come on, thing. All right. Okay, so sole proprietor to me, right? And so I'm not an attorney, I'm not a tax professional, and this is, me trying to give everybody a very high level understanding of like, okay, how can we distill this down to the simplest form? And all of these really come down to how the state views me as a business versus how the IRS taxes me, right? So I think it's really important to keep that kind of, that's going to be the two narratives that are going to be carried through this whole presentation is, okay, how's the state viewing me? Because business law, typically, unless you do something really bad and end up in the Supreme Court, business law is typically governed at the state level, right? And then the IRS is how we all get taxed. And these are the two big kind of overarching rulers of our day-to-day operations as a business of one. So let's go over the very simple basics, right? Let's define these things. Sole proprietor is a single person business not registered as an LLC or a corporation, right? So you don't have an entity. A limited liability company or LLC, and for the purposes of this call, we're just going to talk about single member LLCs, okay? And that's because the vast majority of solopreneurs are single member LLCs. If you want to go deeper on anything like what Ruth asked about partnerships or multi-member LLCs, please reach out to us. Happy to chat. But for the purpose of this chat today, a limited liability company is an entity registered at the state level to engage in business relationships. We've intentionally chosen a little shield here, right? What it does is it now blocks some of the personal liability that you have as a sole proprietor, right? Because you're now engaging in business relationships as a separate entity. The final one, the S Corp, is a shield with an S on it, because for the purpose of this call too, the vast majority of solopreneurial S Corp support options tend to be an LLC elected as S Corp with the IRS. So now if we're looking at that from both a state and IRS level, at a state level, you are a limited liability company, usually a single member LLC for solopreneurs. And that at an IRS level, you are electing to say, hey, I'm going to file under subchapter S in the Internal Revenue Code. And we'll get into all the details of what that means. But that's when we say sole proprietor versus LLC versus S Corp. Those are the very high level definitions. But hey, Mark, what if I'm an independent contractor? Right? So this is where things start to get a little fuzzy, right? For the purpose of today, sole proprietor, independent contractor, we're going to kind of deem those synonymous. But if you dig in very deep on the definitions, and typically this is actually interchangeable or this is defined at state levels. Typically a sole proprietor is someone that's selling goods or services directly to a customer and they track their income themselves. So things like people like therapists, realtors, wedding photographers, indie app makers, somebody that's like selling an app direct to a customer. And I think the key is that, you're not getting a 1099 from someone. The independent contractor is not like a whole separate type of entity. It's basically just defining what that business relationship looks like. In the eyes of the IRS, you are both going Schedule C income tax. That's what it is. And you are both still self-employed. So maybe a better way to say this is like you're a self-employed, no entity solo. But for the purpose of the rest of this call, sole proprietor, independent contractor, we're just going to use interchangeably. So let's compare sole proprietor to independent contractor versus a single member LLC. The bold items are where there's a clear potential win as compared to the other one, right? The big nasty part about a sole proprietorship is you are contracting, whether you are actually writing contracts or or verbally contracting to do work, and you're contracting as your individual person, right? And your individual person also owns all of your personal property, your home, all the cash in your bank, your car, your cats, right? That's the big one for me, is my cats. Like if somebody tried to take my cats, I'd lose it. So you have unlimited, and that's a scary word, but you have unlimited liability in that regard, right? And I think that's really important to focus on that part and realize there are some businesses that truly don't have that much risk, right? If you are doing graphic design for somebody, creating images, photo retoucher, very unlikely that you're going to end up in a situation where you're going to get sued by your client, right? And then on the farthest end of the spectrum, I've talked to a couple of fractional CTOs, chief technology officers, working at fintech companies that are transferring millions of dollars of money per day, and their code kind of judges how that money is transferred. And that person was operating as sole proprietor. Now that feels really scary to us, right? So this is where the fuzziness happens a little bit around kind of understanding, do I want to get an LLC, right? Is part of that is this kind of fuzzy metric of how much risk am I exposed to? Are the decisions that I'm making as a contract resource, as a sole proprietor, are they, potentially going to lead to me getting sued and then putting my assets at risk? Some people also get around this risk by holding liability insurance as a sole proprietor, and that is a totally reasonable thing to do, right? Typically professional liability or errors and omissions, or general liability, kind of that's the trifecta. If somebody's dealing with cybersecurity issues, also cybersecurity coverage, that is a really good way to balance out the downsides of a sole proprietorship, okay? So the big difference with the LLC though, right? The LLC is the entity contracting with the clients, providing the services to the clients or customers, and it creates this shield. So that's why I intentionally chose this shield image before. And the owner now has limited liability, right? So that's really the high level consideration between these two, right? And I think it's important to understand these two first, and then we can talk about kind of the potential of adding. I like to think of S Corp as like adding an additional layer on top of this already kind of solidified foundation versus like it's something totally different. If we look at the formation of both of these two, right, you actually, as soon as you start doing business as a person, you are a sole proprietor or independent contractor. You're not necessarily doing it. You don't go to the state and raise your hand and go, hey, I'm going to do something. I'm going to sell business. And they're like, why are you here? Okay. That's not entirely true though. There might be business licenses still required as a sole proprietor, but you're not going to the Secretary of State that you currently live in and registering as a sole proprietor. LLC is formed with the Secretary of State. You're basically going to the Secretary of State and saying, I'm making a company and it's going to be a company that's going to engage with clients. I just happen to be an owner. Business license requirements still may apply to the LLC too. What I've always said to everybody is one of the best things you can do if you're considering the independent lifestyle is actually make use of your local chamber of commerce, finding out whether you have license requirements for the business you're operating, or state or like county or local taxes is a really, really good use of your local chamber of commerce. I'm sure like 95% of us have never been in there, right? But it can be really helpful. On the compliance and cost side of things, right, there's very little cost to run a sole proprietorship other than the difference in tax filing and quarterly estimated taxes. And there's no startup cost. Single member LLC formation cost, there's the periodic filings, and then an annual fee or franchise tax, which depending on state can be pretty heavy. Like California, for instance, is $800 per year for an LLC. From a naming perspective, like, oh, can I still operate as myself? Well, yeah, both. Or can I operate as a business name? Both can operate as yourself or register a DBA of doing business as. So they can still be a sole proprietor and have like marketing master, marketing masters could be your DBA. That can be totally fine. And the LLC can do the same thing. So your LLC might be, Moon Mission LLC, but you're doing business as, marketing masters. Both of these types of entities in the eyes of the IRS are the same. They're self-employed entities, especially the single member. And let's focus on single. This is why I want to focus on single member LLC and sole proprietor, because that does get more complex with multi-member LLCs, partnerships. That is different in the eyes of the IRS. So, all right, let's move forward here. This is one of the big things, right? Like, oh, wait, I've got no liability as an LLC owner. Can I just do whatever I want, right? Like, no, that is not the case. It's a shield, not an impenetrable wall around you, surrounding you with every different place, right? It's called the corporate veil, right? If it is deemed that you still intentionally did fraud you used the company to do fraud, or commit harm or lied in your services, if you have intermingled business and personal finances, that LLC is not impenetrable, right? So this is one of the reasons for people using an LLC through our platform. We recommend business and personal bank accounts separate, and do that as best practice, and that's to better uphold the corporate veil of protection against your personal assets. So no, you're not home free. You can do whatever you want and nobody can get you with an LLC. So it's not all that. Okay, so those are the entity basics. Let's go through the tax basics, right? So sole proprietor and LLC, as you can see, are the same in the eyes of the IRS. It's a pass-through entity. Actually, all three are technically pass-through entities, meaning it's not like a C corporation. It's not like a Google, where the entity itself is getting taxed with corporate tax in the eyes of the IRS. Most of the tax happens at the individual level on your individual tax return. Both sole proprietor and LLC are subject to self-employment tax, and we'll get into that in a second, kind of understanding why. And I bolded that out because that is the key differentiator between S Corp and sole prop and LLC, is how you can avoid some of the self-employment tax. And then sole proprietor and LLC files 1040, your individual tax return, Schedule C, and a state return. And of course, if you have things like rental income or other variables in your life, you have partnership holdings or something like that, there could be more forms, but this is the most basic form of a filing. The S Corp, also a pass-through entity, right? So it's somewhere in between a standard self-employed person and a true C corporation, a true corporation, where there is not going to be the taxation on that entity that's separate, right? The entity gets taxed and then the owners get their version of the income, and then that gets taxed on their individual returns. It's this really kind of crazy hybrid where instead you run a reasonable salary for yourself. Actually, let me just paint this picture. So all the income you make as a sole prop or an LLC is going to pass all the way through, after it gets hit with all the expenses, it's going to pass all the way through to your Schedule C and your 1040, and all of that's going to get hit with the self-employment tax. With the S Corp, we're going to split you get split into the owner of a corporation, an S corporation, and then the employee of a corporation, right? You run a reasonable salary for yourself as the employee. That covers what the self-employment tax covers. The difference left over comes to your personal tax return without getting hit by the self-employment tax. Okay, and we'll go into the detail on what those numbers are, but that's the fundamental mechanism of how it protects some serious tax savings. But it comes at a cost, right? And a lot of that has to do with admin costs, but also true tax filing costs. You have to file what's called an 1120S. And some states do have their own individual state tax returns as well. California for sure, I think New York State, but don't quote me on that one. And then on the individual side of things, you're filing a 1040, like the LLC and sole prop members for your individual return, married filing jointly, all that's still the same, but with a Schedule E. And then you have a state return as well individually. So those are the tax basics. Let's go over what self-employment tax is, because this is really important. Right, so here's that sole proprietor LLC entity. You got your relationships with their clients, they're giving you money, and all of that, you're going to deduct your expenses, which is one of the big wins with having either a a business of one or a business of many, is you get to deduct a lot of things, right? That's where some of the tax savings comes from. But whatever's left over, that net income, so that income after those expenses have been deducted, is going to get hit with this 15.3% self-employment tax on the first 176,000-ish dollars of income. And then everything after that still gets hit with another 2.9%. Right. So that's a pretty big chunk that, we see this as like kind of a pretty nasty compromise. But what you're actually doing is contributing your share to Social Security, Medicare, state unemployment accounts, the state unemployment coverage, all like that, because typically those things are covered through W-2 payroll for the W-2 folks. So don't think of it as like a punishment as much as it feels that way, but it is how, our type of individuals contribute. Now, what's cool about the S Corp is that, like I said, you split into the owner and then the owner/employee. The clients are contracting with your S Corp. All that money is flowing into that S Corp. You're going to run this reasonable salary for yourself, roughly 3 to 6% savings given from the S Corp structure. Typically, the reasonable salary does have to fall into the categorization. It is still subject to things like, hey, am I hitting the minimum wage in my state? Am I hitting any other type of state or local regulations around salary? That's really important to consider. So it's not just like, oh, I'm netting $100,000. Well, let's do some simple math. Okay. Let's take somebody that's making $120,000 gross. They have $20,000 of expenses. Now they have $100,000 net. All of that's going to get hit with self-employment tax for the sole proper LLC person. That's $15,300. For the S Corp person, you're going to run a reasonable salary out of that net, right? So typically it ends up being somewhere around 50 to 60%. Let's just call it 60%. So that person's going to run a salary for themselves of $60,000. Now that remainder of $40,000 comes through as a corporate distribution to your person. That's where that savings. So now it's, 4 out of 10 of the 15.3% does not get taxed to you. So there's, what is that? Roughly, if we did 50K, it's 7.56 or $7.55 thousand back in your pocket. Now, what a lot of companies don't tell you when they're talking about this, they're like, you're going to save $15,000 if you make 100K. Is all of that is still going to get hit with your personal income tax, right? So you do save a lot of money in the employment taxes, those contributions to Medicare, Medicaid. That's why we try to be a little bit more transparent and say, hey, a very conservative estimate is like 3 to 6% after the cost of how much it costs us to help you run an S Corp. So that's one of the things that's really important to look into in the math. Make sure that the tax calculators that you're seeing around S Corp are giving you all the way to the net that happens in your personal return, not just what you're saving. I think the key word to look for is like, this is how much you're saving in employment taxes, is what a lot of providers will tell you. So yeah. Here's another just kind of visualization of it, right? That top one is a corporate distribution. You're effectively split into 2 people, and the bottom one is the reasonable salary. We just went through all that math. And through that reasonable salary as the S Corp, this is where you're making your contributions to Social Security, Medicare, state unemployment. So now the rest of that is not getting hit with a self-employment tax. If you want to look up some pretty fun, I say fun, I don't know, maybe it's fun to me, maybe I'm just a weird person. But the Gingrich-Edwards tax loophole, Newt Gingrich and John Edwards, that's one of the most famous examples of kind of over abuse of the S Corp mechanism. They were running reasonable salaries on themselves for roughly, I think it's a salary of like $200,000 or $300,000, and then they took a corporate distribution of $10 to $25 million. So that might seem unreasonable to most people, and it probably was, right? So that's the furthest example of like how people can use the S Corps, but pretty atypical. We tend to lean more towards like, hey, let's choose something that's going to be really safe and not get you audited, and choose a reasonable salary that's going to be, easy to justify if that ever happens. This is the big part for us, right? So I think to us, and we'll go over a whole summary in a second here, qualification for S Corp to us is something that's really important, right? And we feel like a lot of people in the space don't talk about all of the factors. The revenue threshold to us is, yeah, that's, you're making above X, like you should do S Corp. It tends to be the narrative that we all hear. We want to make sure that if somebody's going to choose S Corp, it's going to actually pay some real returns, not just pay for itself, right? Because typically the S Corp support style options, even if you're looking at the kind of a more automated platform like us or Collective or Lettuce, you're looking at somewhere around $300 to $400 a month to run just the S Corp side of things. And so that's, north of $4,000. And so like, if you look at kind of that tax calculator, that rough numbers, like if you're going in at 70K of net income, the likelihood is that you're probably close to netting zero, which feels really silly when it actually is a pretty burdensome thing. It's not crazy burdensome with partners like Besolo or the other ones that I've mentioned, but it is a real consideration around additional burden, right? And a lot of it comes down to that running a payroll for yourself, right? So when I say, you have to run this reasonable salary for yourself, let me paint the picture, right? What really happens is our payroll engine connects to your business bank account. We're going to define for you. So effectively, we're, connecting with your S Corp's business bank account. We're going to define with you what your reasonable salary is. That money's going to get pulled out. There's actually employer taxes on that money too. The right taxes are going to go to the state and federal agencies. Through us, we have benefits options, 401k, all that kind of stuff. So that would get pulled out too. And then the net goes back to your personal bank account, which is a really silly little loop here. But if you just think about, what happens if I have, very inconsistent revenue, like that money's coming out, right? And yes, we can flex it, we can move it up and down, but you still have to hit an annual reasonable salary in the eyes of the IRS, right? So like the calculus of like, okay, I need to push my salary down, but I still need to cover, whatever other benefits options I'm covering through Besolo. The calculus of that can get pretty intense pretty quickly. So that's why we say number 2 for qualification is revenue consistency, right? I like to see, and this is just what I personally like to see for everybody's like, 8,500 a month consistently, cool, plus or minus 10%, been doing that for a while. And it's not just because it makes our lives easier, it's going to make your life easier as well. Because we all have so much to focus on as independents, right? Like adding another layer of complexity around like, oh no, is there enough money in my business bank account this month to cover my S Corp payroll? And it's coming out tomorrow, and now I have to move money in from my personal. Those are the types of things that we really don't want to have happen. And then in our scenario where we can actually run and give benefits through that salary, like PPO healthcare, 401k, dental vision, all of that. If one of those payrolls is missed, cash is coverage in the benefits space, right? So for us, we really, really, really don't want that to happen. So that's why the second qualification criteria for us and we think for everybody should be revenue consistency, just to make sure that things are feeling pretty good. Now, that can be offset if you're somebody that just has a huge amount of cash in your business bank account, right? If you just happen to have a really high level of reserves, then you've got like, well, I've got 6 months of payroll in my business bank account, I don't care. Well, then that can be offset. But typically most people like to kind of pull distributions out and put some more money in their personal bank account. So yeah. And all of these factors for me also lead to the third qualification for S Corp, which is understanding the freedom and flexibility compromise, right? If this lifestyle for you, as it was for me, was about, I want to kind of 80-20, not so much as like 4-hour work week type stuff, but I want to try to maximize my hourly so I can enjoy my life as much as possible. S Corp can feel a little bit more like a treadmill, right? Where you get on it and you have to consistently kind of run because of these factors. And it is an actual burden that people have to be aware of. So we like to highlight that and say freedom and flexibility can take a bit of a dent from choosing S Corp qualification. Now, if the way in which I frame that question for a lot of folks is like, hey, is this your path? You got the revenue threshold, you got the revenue consistency. Does this feel like your path for the next 2+ years? Yes. Okay, great. Then you're probably a pretty good fit, right? And then we can put them in touch with one of our CPAs and go through that whole qualification as well. But I think this is a more holistic approach to defining whether or not S Corp is right for me, right? All right. All right, so let's take a look at the summary here. Here's kind of all of that rambling that I just went through in one slide. Honestly, you probably could have just done this one slide and you guys could have saved 20 minutes out of your day listening to me rambling. But right, so sole proprietor, you have the risk around liabilities, right? You don't have that shield between your personal self and your business operations. LLC and S Corp both have that. Sole proprietor and LLC has to pay the 15.3% self-employment tax up to that cap that we talked about. And then there's 2.9% beyond that. And that there's variations in there. So it's just a high level. Don't quote me on those numbers, but up to the cap, it's 15.3%. Sole proprietor and LLC do not have to run payroll for themselves, right? And there are, I've heard of lots of stories of people that they've got a guy, right? They've got a CPA guy who will fabricate payroll for them after the fact, and that's totally fine, right? Like that absolutely works. A CPA can do that for you. It tends to be a little bit murkier, but people do that all the time too. So you don't necessarily have to go with what ourselves, Collective, Lettuce recommend, which is actually running payroll through a true payroll engine. We have heard a lot of stories of people who have a CPA that can effectively bill the payroll after the fact. I don't know how that works. We have to do traditional payroll because that's part of how we unlock benefits for folks who are S Corp members, is the payroll piece is actually necessary. And we can go into that. If anybody has questions about how the benefits access part works for our S Corp members, because we do have PPO healthcare, and dental vision, hospital indemnity, 401k, all those things, feel free to reach out and I can give you a little rundown, or I can actually share a webinar about understanding PEO, professional employer organizations, as a fractional or freelancer. So that's the big burden of S Corp. And that's why you can see here, right, the admin complexity of S Corp is, 2 or 3x or more as compared to the other two options. And then the cost to operate, right? S Corp is clearly in the $3 signs, definitely heavier on the cost to operate. If you look at kind of the more tech-driven platforms like us, Lettuce Collective, typically in the $300 to $400 range per month. And then we've heard wild stories from the field of some people are like, nah, I've got a guy who, some people say, I've got a guy who can do it for, $500 a year. And I'm like, that's awesome. Good for you. If you trust that person, go for it. And then we've heard things on the, other side of things, which is I got completely screwed. It cost $4,000 to file my 1120S for S Corp. So I think at a high level, at least there are options today to do S Corp that are solid options with fixed prices versus you're going to go in, a CPA is going to say, hey, you should totally do S Corp. And then you get there and your annual tax filing costs $6,000, right? So yeah, that is the summary of all three together. And then, like I said, we've got this all on one platform, but let's go to Q&A. If anybody has any questions, this is really important. So the form, if anybody's interested and you go and submit the form on the Serial Marketer's landing page, if you can't find time to connect with me and you really are interested in taking advantage of our year-end tax filing deal, just shoot a message to hello@Besolo and say like Serial Marketer's interested in tax filing, and I'll make sure that we can find some time for you, okay? But yeah, let's get into Q&A. Dorian.
Sorry for doing the flesh-based hand raise. That's old school, I know. So here's a question. I'm with an SLLC right now. I had considered an S Corp, talked to my accountant, and decided to go with the LLC side. You said something though that made me consider the other side of it. Like, because of the nature of my business, there are, you talked about like 8,000 a month, 8,500 a month as, sort of a break-even point. There are times when like I might have a month that's 30,000 and then a month that's 3,000, a month that's 5,000 because I might land a contract, that's paid out over the quarter or something like that, or they'll cut the first check.
Sure.
So I'm not sure if that affects the thinking. Like, does it matter that you get a nice 5 figures in one month and then a mid-low 4 figures the next month, even though your average is what you said?
Yeah. And please take what I say with a grain of salt, right, Dorian? Like, please go see a CPA, or we can connect
Yeah,
you with a
yeah,
CPA if you want it.
right,
But
right.
I mean, to me, it depends on your savvy with finance, right? And your comfort with finance, right? If you can find a way where you keep an average balance that can cover what you're comfortable with on kind of the fluctuations to cover your payrolls, because that's one of the things. Once you get your reasonable salary, one of the things the CPAs will do is say, okay, here's how much you're going to be paying each month in the gross on the payroll side of things. So you can work your way back from that math and then see if you are comfortable having 2 to 3 months of coverage in your business bank account on that. And if that's something you're comfortable with and you're above those thresholds, then that's up to you. But it's, maybe it is a good option, right?
That's kind of
So
a a small admin cost in that way. You've got to
totally,
manage those bounds. Yeah. Thank you.
exactly right. Yeah. Something else that's really interesting that I didn't mention here is like reasonable salary does not have to be cash that hits your business bank account, right? Solo 401k contributions can be considered reasonable salary. So you can use the salary to potentially, and this of course can vary state by state. So please, if you want to go deeper with this, contact us. We can put you in touch with one of our advisors at our Solo 401k partner. But we have seen people, okay, I'm giving myself a reasonable salary, but 15 or 20% of that per month is actually going towards contributions towards my 401k. Right. So that's a nice little hack. We actually see the solo 401k as a necessary part of kind of the macro playbook of tax savings for both LLC members and S Corp members. It's just such a good tool where, to block self-employment tax on the LLC side of things. You could open a solo 401k as a sole proprietor too. I don't want to, it
Yeah.
doesn't have to be an
Yeah.
LLC through us, but
Yeah. We just,
yeah,
just so others are aware, what I have an SEP IRA, which I guess is what you're talking about, or is analogous anyway. For tax purposes, it's
yes,
analogous.
totally. Yeah. Yeah, it's just we chose to do solo 401k for both of our customer types because we were able to come together with a structure with a partner where we could actually cover the cost of it from a monthly service fee and actually just boil it into our monthly cost. So other than asset under management fee, there's no additional cost for our solo 401k. Versus a SEP IRA would be potentially we'd have another cost line item, which we didn't. We wanted to have it so that Besolo, you could either choose LLC or S Corp and you know what your monthly price was, right? That was a big thing for us, was to try to eliminate some of that choice paralysis.
Thank you.
But yeah, good question, Dorian. Thanks. Tony.
Yeah. So, with the reasonable salary, is 50% generally considered sufficient, or
It's calculus, man. It's something that has to be assessed with a CPA, right? Like
okay.
there is, more consideration than just 50 to 60% of your net income.
Okay.
That tends to be like a very kind of fuzzy starting point, but it's definitely
Okay.
do not use that as a rule.
Okay.
It depends on profession. Some CPAs, depending on where somebody's at, will actually dig in and do kind of like, okay, let's look at the Bureau of Labor Statistics for your profession and
Sure.
see what is justifiable. It can also change depending on how many hours per week you're working on average, right? So you can technically justify, I'm actually a 30-hour a week employee, right? It's a calculus, and this is why we always recommend reasonable salary should be worked out, with a CPA that is very familiar with S Corp for single member LLCs.
Okay.
Okay. Sorry, I can't give you a clean
No,
yes or
that's
no.
fair. That's the answer. That's what I was looking for. I have another question, but I'll let somebody else go if they want to go. Do I get to fire my next question?
Go for it, Tony.
All right.
Go for it.
So if you have an S Corp, is there any in terms of your retirement account, does it have to be like a SEP, or can it just be a regular 401k? You know, does it matter?
It does. Yeah, and this, once again, those are nuances. This is why we, and we also offer these kind of consultations before somebody chooses to become a customer with us, because it can matter, there's a lot of different factors that can matter. Is like, have I contributed to a SEP or a tradition or a employer 401k this year? Does that allow me to do a solo 401k? There are a lot of factors there, and once again, sorry, I can't give you just like a yes or no
Oh, that's
answer.
fair. Okay. Okay.
Yeah.
Okay.
Yeah. We always, this is why we have these various layers of expert support built into our team. And so that when I get to these types of questions, I'm like, I can't tell you that. And
Right.
but we're happy to help and see if there is a good way forward. Okay.
Totally. Totally.
Yeah. Cool. Any other questions that anybody has? No? Okay. Once again, there's the link. And if anybody, David, your call, if I can do a little run through. Thanks, Ruth. Yeah, please feel free to reach out. hello@besolo.io. And if you have any more questions, happy to help in any way we can. If anybody wants to see the Besolo platform, we can do that, or we can cut it here. Your call, David.
Happy to do a quick tour of it. Well, we have a little time. For those who want to dive in.
Yeah. Cool. Okay, great. So here's the dashboard of Besolo, right? Intentionally simple, task-driven, date-driven. As we talked about with kind of the overarching theme on running your business of one is like it's the dates you don't know that are going to bite you. So we wanted to make sure that there's a very clear call to action around, hey, here's the next thing to do. And so we do form an LLC for anybody that needs one, level that LLC up to S Corp if they're currently an LLC, or actually we have leveled some sole proprietors all the way up to S Corp as well. We get everybody an EIN, makes it easier to get the business bank account, get everybody a registered agent to help cut down on spam mail and all like that. Our payroll engine is actually integrated with our solo 401k partner and with our benefits. And then our CPAs will go through the reasonable salary conversation with you and help you decide what that's going to be, and also kind of do a triple check on, are you S Corp qualified? And then our accounting system replaces a QuickBooks, a Wave, or Xero, but it's made for solopreneurs and businesses of one, very small businesses. So I always like to say that QuickBooks is like hanging a picture on the wall with a sledgehammer. There's the chart of accounts is crazy. It's got a lot more than most of us need, with the 10 to 15 transactions plus 2 meals and a travel every once in a while. Like, you don't need all of that. So our system is a lot easier to use. It's going to integrate right with your business bank account, right? Once again, this is part of the reason we recommend having a business bank account, so that all those transactions come in nice and clean. If you have a business credit card too, we can integrate with that. All the expenses are going to come in basically in real time. And then there's a rules engine here that will help you categorize things. And then if you have any questions about categorization, you can always ask our team. Our support is available across all the tools in Besolo. So that's one of the unique offerings here, is the all-in-one idea plus unified support to help fill the gaps in between what's typically, these disparate tools. 95% of our users are self-service in the accounting platform, with a little bit of hand-holding typically around setup. But if somebody is like, I'm allergic to books, I don't want to look at books, I hate books, we can actually add a human bookkeeper even to the LLC package for $80 a month, up to 50 transactions, or for $120 a month, up to 120 transactions. So just that support is there. If you're like, I'm too busy now, I'm swamped, I don't want to do books anymore, there's a book, we can add a bookkeeper. So support's there if you need it. One of the really cool things about having an accounting tool that's connected to your invoicing tool is that you can actually tag expenses to a client and then pass them into the invoicing tool. So you're like, actually, that Uber ride was one that Google owes me money for because I was driving to their office to have a meeting. So that will go into the invoicing tool, which I'll show you in a second, but let's go into time and task real quick. So time and task tracker, so you can track time in real time, right? So you can say like, I'm doing engineering for Google right now. You can add time in arrears. You can say like, I did 2 hours of time yesterday. You can choose tasks here. You can define custom rates on all those tasks if you want to. So we'll just do 4-round rate here and then say Google, save that. If you go up to the little gear, there's all the time and task reports you could possibly want. So you can say, what did I do for Google last month, and see your full breakdown of time and task, which is really nice if you're doing retainer style engagements. If we pop over to invoicing, if we look at new invoice, we can just choose the client here. If you're doing straight hourly work, you can just click on time and task, and then there's all that uninvoiced time or task that you have already logged. So that's really nice and easy. If you're doing the retainer style, you can use that report and do something like retainer, right? And have your 30 hours, and that would be 150. And then you have your overage. If you had like 5 hours of overage, and that'd be like 175, right? So that's if you're doing a retainer, then you can attach that little report. If we click on the expense item, there are those tagged expenses, the reimbursables, that will automatically pass through to the invoice, which is nice. And the system, right, will categorize those as reimbursables. You can do discounts, either percentage or dollars. You can do a monthly recurring invoice where it's just, hey, I'm a 5K a month fractional CMO, over and over, here we go. You can also process invoices via credit card. We're a Stripe Connect partner, so you make the simplest form of a Stripe account, and then you can get paid via credit card really easily, but you don't have to use that. It still has Stripe's fees, so you can pass that on to the client if you want. And we're working on a feature where you can just turn a little switch and pass that on to the client. So you can always do direct payment from client. And then the system's going to be looking for this amount coming into the invoice, or coming into the business bank account, try to automatically check off that invoice for you. You can use this as a quoting tool. You can have various ways of sending it to clients, which is nice. Auto calculating mileage calculator. So if you're using your personal vehicle for business use, you can put in trips here, and it'll automatically calculate the deduction based off of current year's rates of deductions, which is really nice. All the reports you could possibly want and need here on the accounting side of things. On taxes side of things, everybody that comes in is going to fill out their tax profile. And this is the driver of the auto calculation of your quarterly estimated taxes, right? You fill out this tax profile, and you can have W-2 income as a household. You can be a side hustler, right? So we have a lot of clients who are, I've got a W-2 job, but I've got 5K coming in through my side hustle. Michael, you do not need QuickBooks with the service. This replaces QuickBooks. So we like to think that it replaces it and makes it easier too. But so whatever you put in here is going to then think of this as your quarterly estimated taxes and annual estimated tax speedometer, right? Where am I at, and how much have I paid? We don't file quarterlies for folks, but we do fire a task and say it's time to do quarterlies. Here's how you do it. If you have any questions, you can always ask our team. And the system will dynamically generate the amounts that are going to put you in a much better place versus getting to April and crossing your fingers and going like, did I get enough? I don't know. Or maybe I paid way too much. Oh, I could have done something really fun with that. On the annual filing side of things, LLC members do get 1040 Schedule C state return fully included in the 129 a month, 116 a month for, and right now 2024 filing as well. It's going to feel, I don't have a visualization of the experience in the demo platform, but it's basically the CPA is connected to, the tax pro is connected to your accounting system. They're going to pull everything out. You go through a questionnaire, start chatting with them, and then you can do a video call. Very similar to like a TurboTax Live experience, which is normally a $1,400 product. And then compliance calendar, all the state and federal compliance dates that these all drive tasks. One place we don't have visibility, as I mentioned today earlier, is that kind of that use of the Chamber of Commerce. We cannot do county or city taxes or licenses just yet. So we always fire a task for everybody, which is go talk to your Chamber of Commerce, see if you have any local regs that we don't have visibility into, but all the state and federal regs we're firing tasks on. And then on the benefit side of things, these logos are blurred out. I apologize. We are venture-backed company, and I'm always pinching more VCs, which is great because I get to give you guys free LLCs and other free stuff. But for S Corp members, actually, let me just start the other way. For LLC and S Corp members, solo 401k, which can potentially have state, availability challenges. For LLC members, we're going to get through that in the next 2 weeks. Hopefully, it's looking like 99.9% in my eyes that we're going to have solo 401k everywhere for LLC members. Pet insurance you can get as an LLC member or S Corp member, and then we have dental vision that you can get as an LLC member or S Corp member. As an S Corp member, you can get national PPO healthcare on the Blue Cross Blue Shield National Network, life insurance, hospital indemnity, accident, critical illness, and oh boy, I'm missing one right now, of course. Yeah, sorry. And then licensed advisors to talk through these questions for y'all. So yeah, so that's Besolo. And like I said before, the big part is you can always ask us a question. We're always here to guide. And our big thing is to not push people into things, is to meet people where they are, and then try to give guidance along the way. We like to think of ourselves as like the self-employed park ranger, like, all right, if you want to go down that canyon, be careful. Those rattlesnakes on the left, but there's a cool waterfall at the end. I see you've got no water bottle. You might want to just go to the lookout stand over there. So that's kind of how we approach it. And yeah, thank you guys, everybody, for your time today.
Yeah. Thanks a lot, Mark.
Yeah, thank you, Mark. It's perfect.
Great. And yeah, hello at Besolo. If anybody has any questions, happy to chat, and happy to just be of service in any way we can. Okay.
Great. Well,
beautiful. Thanks, Mark. Thanks, David.
Yeah.
Thanks.
Great to see everyone.
Thanks, David. Have a good day, everybody.
See you soon.